16 March, Thursday, MAO with Cal once again, guys. A slew of Wall Street bears are waiting to pounce in. Alright, now honestly, this is the first time I get to know that that's how you actually tell a group of bears that's around. Okay, anyway, if I pronounce it wrongly, apologize. But the thing is this, the bears are definitely lurking around, and anytime if there's any sign of weakness, blood on the street, these guys will pounce in. And I'll tell you more in detail today. Loads of bear. Let's begin. Now, before we go into that, do note, guys, you can continue to put in comments in the videos from now till next Friday. So that next Friday itself, right, is we will do the spin the wheel lunch with Cal thingy, right? Because this week is over. Next week itself, right, we will have any lunch. It's the following week that we have the lunch on the Wednesday, which is 29th of March, okay? So guys, if you really want to join me for this really good Indonesian food, continue every single day, leave me a message on the video that you watch, and of course make it sure that it's make some sense on the video comment, and I'll put it in, okay? Alright, so this place itself, right, looks very good. It's at Paragon Shopping Center, and the thing is this, the rating is high, 780 reviews for 4.5 star. That's pretty consistent, yeah? And I love this. This is my favorite fish, okay? So I'll see you guys. So quickly, every single day, like, subscribe, and also leave a comment. I will bring you in for the spin review and lunch with Cal thingy. Alright, okay, let's go. Now, disclaimer apply as usual, and thank you Ames for the kind sponsorship. Okay, so now we have 95 people registered for my coming preview. Thank you guys so much once again. Now my target is 120, and that's a maximum cap. And by tomorrow, you'll start to receive the Zoom link, okay? Alright, so the thing is, we all know that the financial tsunami has arrived. The question is how low the market will go, right? That's very important. So on 18th of March, this coming Saturday, via Zoom, I will be telling you guys what's my take. I'll tell you what number to take note, and what are the markets you can actually use to make some money, right? So how low the Dow will go, that will be very critical. And of course, which time to buy crude oil and buy some gold, I'll tell you more in detail. And additionally today, I'll tell you this, guys, I will give you 3 Singapore stocks that I'll recommend to you to look for mid-term investment. That means that you buy and you hold for at least 6 months. Alright, so these stocks, I think that by May or June, it should be lower than today. And I think that there'll be a good time to just buy some and keep it until the end of the year, because I believe that this sector will perform. Okay, so guys, register right now. I have left the link in the comment box. Do it, okay? Alright. Now, let's recap what happened last night. What a recovery. Now, the Dow is down by 280 points, right? I understand. But do you know that the Dow was down by 780 points during the day itself? Oh my god. And it really missed my 31,411 by 5 points. Ah, man. Oh, so painful. I mean, we have some trail of position, but if we had hit that level, that'll be a very nice day for me. But anyway, guys, what's happening right now? You can see, right, Microsoft, Google, Meta, Amazon all went up. But interestingly, Apple didn't. That's my question mark here. Why? Okay. And if you look at the financial stock itself, right? Oh my god, Morgan Stanley down by 5%, Wells Fargo 3.29%. So you can imagine that if the market actually ended at a low at 780 points down, you cannot imagine how much they have sold off, right? This is a scary part. So for Morgan Stanley is down by another 5%. It's below 150 million market cap, billion, sorry, 150 billion market cap. So that's why I feel that something is still not right, yeah? So let's take a look here as well, right? As Wall Street basically recovered, not 780, 725 point, my bad, yeah? Okay, then recovered to down by 280. Okay, so the thing is this, what is the biggest thing is Credit Suisse, of course. Now, I have been calling for sell on Credit Suisse for the longest of time, and if you look at my previous video, I already tell you guys why I said that. Now, the thing is this, now the biggest investor, the largest investor, Saudi National Bank, said that it could not provide additional funding for the bank. Oh my god, the largest investor, the Saudi National Bank. So this actually sparked great fear, because imagine a bank can't lend a bank. It's either that SNB is not doing well, which I don't think so, or they know that they are going to throw money, good money after bad money. So that's the reason why later on, right, the Swiss regulator came out and said that the Swiss National Bank will provide the additional liquidity. Okay, so that's the reason why the market recovered 500 points on the back. Okay, but the thing is this, is it enough? Well, apparently, the latest update says that they're going to borrow $54 billion. Let me put it this way. Well, SVB needed, right, $2.15 billion for their daily operation, but the entire portfolio was like $100 billion. If now you're telling me Credit Suisse and now at this current price below $2, by the way, congratulations for those who shorted with me, right? Then would they only need 54 billion? I don't think so. I think it's just like enough to tie over for a short period of time, but I don't think it will help them at all. And of course, the thing is this: if the US, the Europe continue to rate hike, that will give them more trouble. All right. So you can see what happened, right? The Wall Street gap down, traded down. All right. Then after that, during the second half, the market just picked up, and then the market rallied all the way. Though it is still far from the closing on the previous day, but it's definitely off the low. All right. So what do we expect from here? Now it's going to be very important, guys. Let's take a look here. Okay. Oops, sorry. Okay. All right. So wait a minute. Let me just get my pen up. Okay. The thing is this. Yesterday we have the PPI data. Very interesting. The market was expecting the same figure, but the thing is that the PPI data actually came negative. Wow. Okay. So by right, the PPI measure the change of price of goods sold by manufacturers. So it seems that the inflation is going down. And that's another reason why the market should be happy. But if you look at the market, right, it gapped down, traded down first. So the market didn't really bother of that data, as everyone is focusing on the bank right now. And of course, retail sales also dropped at the same time. So both these two information should be very good for inflation data. But surprisingly, the market didn't bother, which is quite understandable. So today, we will look at the jobless claim. Okay. Now today, we have 211,000 from the previous, and the market looking at 205. Now, I believe that this number will go up a little bit to 220. So let's take a look. Now, of course, if this number is this figure that I mentioned, then of course it will definitely help a bit on the current inflation problem here. But you look carefully into the market, right, you can see that now the PPI final demand, right, you can see is down all the way. So that shows that the inflation is coming down. So by right, it's a good thing. But the thing is that it's still very far away from the consensus of 2. So where we are right now is 4.6, right? So we need to do more, right? So the only way is this period of time, the interest rate from 0% went up to about 4%, right? So that is a reason why the thing came off. So if they really want to bring it down to the 2% level, then that means that they have to continue to raise interest rates. But the problem is, if they do it right now, at the very moment now, it will crash the market. So that is the problem here. Now we hit a very important what they call stoppage point right now, and the market has to decide what to expect. Yeah. So let me explain this chart to you one more time regarding about this yield thingy itself, right? As you can see that whenever there's inverse yield, okay, you can see that the inverse spread, okay, we will see recession coming in. And once that happens itself, right, you will see that the whole thing will change over, and then the longer term yield will actually now start to supersede the shorter term yield, and that is whereby you will get a recession usually. Okay, so the thing is that as of now, it's difficult to see that because the thing is still ongoing. And if Federal Reserve decide to stop, then this will start to really tell you that the economy is not doing that well now. They need to do something before anything happens. And of course, usually when this happens, unemployment will shoot up. And don't you realize that right now, Meta and other companies are all releasing people. So it's by, like, you know, it's just basically like a clock. After 4 is 5, after 5 is 6. So if we have seen this inverse yield right now, we should see recession, and we see unemployment and so forth. And of course, during recession period, usually the stock market will go lower, all right? That's something that you must understand. So that's why the Black Swan Fund Manager, all right, he was pretty accurate back then on his stick in Lehman Brothers, has came out and said that the debt is creating the greatest tinderbox time bomb in financial history. Wow, okay? And he says that, right, the economy now has too much debt and things can get very, very serious. In fact, itself, right, the ballooning debt across the global economy are poised to wreak havoc on markets rivaling the Great Depression. So the thing is this, of course, he is a very bearish person. So of course you may say that maybe he's just doing it for his own personal gain. Well, anything is possible, but I think it's pretty clear If the credit bubble ever pop, it's going to be the most catastrophic market failure that anyone has ever read about, which is true, because think about this. If now the situation has caused the Wall Street to shake so badly, and it's just only SVB, and it's the top number 16 bank. If any of the bank from the 15 onwards, upwards, right, and also have the same problem, you cannot imagine how bad would it be. And of course, again, you won't know the answer until it happens, right? So all I can say is this, guys, just watch this closer because things get to develop. And the thing is this can go very, very scary. And that's the reason why Billionaire Carl Ichan actually says that we have really some major problem in our economy. So let's watch what he has to say. Very interesting stuff. Let's go. Oops. Here we go. Carl Ichan. Let's go.
We'll get to your latest one, as I mentioned in a minute, but I just want to drill down on this for a moment. So you think the Fed should keep going? You think the Fed should continue to raise interest rates despite what we just witnessed with, the bank failures?
Well, in a way, they go together. I mean, bank failure is a manifestation of the leadership in our companies and the way they spend money, and you really have a moral hazard if you just keep bailing them out. In this case, I'm not going to opine on trying to save some poor people, although the depositors in Silicon Valley weren't exactly poor people. But that's not the issue. The issue is you have to stop inflation. So you say, do we keep going on? I don't think you have a choice. If you don't keep going on, I really believe that the problem of inflation can become such that it's very difficult to get out of it. Hey, maybe there's something we can, that happens. Maybe there's some miracle, but you do have inflation. I mean, look, if you stop, if they don't raise rates next week or next month, I don't know, but I really don't think this is a choice, Scott. I think you can't have inflation in this country. You're paying the price. If you've gone out on a binge, you spent the family wealth and you just keep spending, at the end you pay the price for it.
So it's very clear that even Billionaire Carl Ichan is saying that inflation is the worst thing to happen in the economy, and there's no way the Federal Reserve can stop. They may reduce to 25 basis points each time, but they can't stop. Because if they don't do that, credential is one, credibility is one, and more important thing as well, right? The economy will not cool down. All right, so that's why I also believe that there will be a 25 basis point and it will be continuous. Cannot run away. All right, so that's how I see it together with Carl Ichan. So of course, another Wall Street bear came in and says that, right, the stock market can go low to 2009. Well, basically when things happen, you get everybody become genius here in their views. So let's watch this guy, what he has to say.
There has been, you and I have talked about this before, there has been a very consistent 20-year cycle in the market. You can go all the way back to 1922. Now, go forward with me every 20 years, and you'll start to recognize some of these very important bottoms. 1942, 1962, 1982, 2002, every single one of them important market bottoms. So in 2022, last year, an important market bottom was scheduled to appear. Well, we had a bottom in October of 2022, and we have yet to go below that bottom. So you can make an argument if you want to be bullish. You're not going anywhere to the downside until you break those October lows, October of 22. Now, some indexes are closer than others, but you break those October of 22 lows, and then you really accelerate to the downside. You're really in trouble.
All right, so I didn't know that 1922 that is a Wall Street problem. I will do a little search, right? But we all know that 1932, yes, to 1984, you know that itself. And going forward from there, all right, this is something that I need to take a look. Okay, but the thing is this. I still think that, yes, indeed, everybody knows that the October low is a level that the market wants to break, because that is where the stops are, right? So if there's going to be any the lingering buyers, right, that means they'll be putting a stop loss at that October low. And Wall Street is like the sharks. When they smell blood in the water, they will definitely arrive, and definitely they will hunt out the October low. So to me itself, right, most likely it will likely be happening. All right, so that is my view. How do you think, guys? All this video, I'll put the link into Trader Boys. You can watch them on your own. Yep. Okay. So again, a lot of bears calling for sell. Yeah. And Mike Wilson, come back again. Okay. Mike Wilson says that sell any bounce on this government intervention. Next leg of bear market has begun. Whoa. Okay. Now, of course, we all know that last year, Mike Wilson was perfect. Whatever you call for sell, almost within the 3 working days, the market will sell down pretty bad. But this year, when I was telling you this guy in January, I said that, look, Mike Wilson was perfect last year. If I'm the big boys of the whole world, so how will I play this game? Probably make it wrong, right? Anyway, so the thing is this, he jinxed himself in a way by calling for a potential recovery, and next day, the stock market came down already. So now the thing market came down, he's calling for the start of the bear. Let's see his reason. Now, his reason is very simple. He feels that, right, the failure of Silicon Valley Bank is one of the main thing, and definitely this will going to bring new lows, okay? This is from Mike Wilson, Morgan Stanley Chief Investment Officer. He's one of the highly watched investment officer for last whole year. Okay, he's saying that, right, the bull trap appears to have solidified at this point, and he suggests that any bounces on the government intervention to quell the immediate liquidity crisis SVB will definitely be a reason to short. And I totally agree, because we have seen before, anytime when the government tries to intervene in the market, yes, the market will recover first. But after a while later, the market will bring back down in force and basically take advantage of the intervention. We've seen it very clear in China, Hong Kong, and Japan. So most likely this will happen in the US too. All right. In his opinion itself, right, he says that the current earnings growth expectation remain materially high. All right, this way it is right now, and the market most likely is to price that risk more quickly. Okay. Now the thing is, at the moment now that the earning revision process has bring the price to earning multiples to 13 to 15, and that will be the level that he's looking at for the low. So now it's about 17 to 18. And I don't deny this, if the PE ratio, the PE multiples, go down to 13, I think that'll be a very good time to buy some stocks and keep it alone. Don't bother and let it run. That is the time that I'm looking to buy. So that's why in this coming preview, I want you guys to join me, okay? I'll tell you more in detail. So you can see at the moment right now, right? Let me just clear up my screen a little bit. Now this is the condition right now. It is very, very clear that the trustee yield curve, right, is showing that the inversion is still continuing, and we all know that after that we will have recession. So it's just very sure that it's coming in. And of course, the current financial condition clearly show that it's going to be tightening again, because the market doesn't want more liquidity. The market now needs to dry up the liquidity. But of course, when you do that, the stock market will definitely shake, right? So people who do some Google search trending, right, they will notice that now people who is looking for high interest saving account is mounting up. All right, basically a lot of people is looking for this because they notice that now whatever they invest with crypto or stock market is not performing. So rather than put the money in the market and get hit by the boys, they might as well save it. So they're looking at a high interest saving account. So do note, every time when the Federal Reserve tightens, right, it always ends in disaster. You must understand this has been going on for the longest of time. It has never changed. So every time you can see that whenever they tighten up, meaning if they increase the interest rate very fast, okay, to make sure that to cool the economy, you can see that, right, you have all the big crashes from the 1929 Wall Street crash to the 1937 Federal Policy Meeting mistake and so forth, right? Every time when they do have a very sharp hike, right, usually there will be a big problem. And of course, when that problem surfaces, that will be the market bottom, and that's where the bear will basically have taken their fair share. They'll leave town, and of course that is where you guys, we should be going in and keep it for a long term. All right, so that's why Michael Harnett, all right, Bank of America guy, says that, right, the stock market will go down to 3,008. At the time he was very confident, but when the market is recovering to 4,050, right, that was where was some shaken, but he didn't really come in and say no. He just said, okay, we have to watch it. And in fact itself, the market after that really came down. He missed his target by two working days, but to me itself, that's good enough, right, Michael Harnett? So if you look at what he says right now, he says this, okay, that now we have the market coming down due to tightening. Now we just need to understand this. The end of the bear market will coincide with a credit event. So what I'm trying to say is this: only when there's a credit event where money is so difficult, credit is so difficult, that is usually the end of the bear market. So now if liquidity is still ongoing, it's still abundant, and inflation is still surging, so that is not what he say. That means that there will be more selling coming in until we actually see this. Right, so the credit event right now is happening, and we only have now a couple of banks is down, and pretty sure more banks will likely be coming out and say that they're going to file for this Chapter 11, I think by this weekend. So traders, watch our market closely. All these things can all happen. All right. Okay, that will be all for today's sharing. I will go to the technical side very soon. This is Cal signing off. Have a great day. Bye-bye.